Again, this is part two of the buying stocks online here. Okay, before I left, we're talking about insider transactions now. Okay, you see, when you see insider transactions means they know something. Sometimes, it could mean that, okay, yeah, they needed the money. They sold 60,000 shares. But once you sell the shares, like, look, you see, September 11th, this guy sold 60,000 shares. Now, what that does is if you look at the chart here, right here, and if you first look up here, this is the date. Show the date right here. Now September 11th came around, and the guys, when they start selling all them stocks, boom, it's going down, 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 and he sold out this Lloyd Hoffman sold out at 581, 60,000 shares, and the stock started going down. So that can have an impact on. Kind of watch the insider transactions now. Uh, Another thing I'd like to look at is I go to MSM Money too, because they got this what's called the Stock Scouter, and it'll tell you the stock. Okay, it gives this stock a rating of 9 out of 10, and then it'll tell you, okay, read full report, and it'll tell you why. And it tells you the pros. It says, the stock measures a relative price change of consistency is very high, so it's positive, and the earnings growth in the past year has accelerated rapidly compared to earnings growth in the past 3 years, positive, and then the 50-day moving average is significantly it's above this 50-day moving average. And one con is the price to earnings multiple is higher than the average for all stocks in the Stock Scouter universe, which I don't really know what that means, but it's negative, whatever it is. So now you go down here and you get it shows you the risk return. So the return's high, risks, I don't know, kind of moderate, I guess. And it gives you the grades, the factor grade, fundamental. You see that, and ownership, valuation, technical, and that. And now for another, if you just beginning, like I was a beginner, I went to Investopedia.com to learn about all things like the price. It tells you the price to earnings ratio, and then it gives you what it is, and it says market value per share divided by the earnings per share will give you. Then it gives you an example, and like a lot of the mutual funds and hedge funds, they look for a company with growth rates, and type that. Oops. Growth. I can't type. Price to earnings, the growth rate, dividend yield, the PEGI, price to earnings ratio divided by the price earnings growth rate and the dividend yield. So there's a lot of things you can do, earnings per share, the multiple, the PEG, payback period, price to earnings ratio. I mean, this is where I got a lot of my information was Investopedia. I mean, I started investing back in October, and then I sold out, I think, November, and then I got back in when the market was at 6,500, and I actually did make some money. So another thing too is don't listen to anybody. I mean, if somebody says, yeah, buy this stock, actually do some research on it. Do your own research, and even if famous Jim Cramer says, hey, go buy this stock, do your research too, because people will make mistakes. So I guess if you have any questions, I guess hit me up. See ya.